Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar.
Hey, good day, everyone. Welcome to another Cambridge podcast. This is episode 78. And today it's a pretty lousy day in South Florida. It's been raining all night, a lot of thundering, a lot of rain, and so forth. But as always, I'm excited to be here with you. I obviously, I'm always thinking about all of you and what are some of the critical topics that I can bring to all of you in order to maximize your retirement and your knowledge and the information that's important for all of you to be able to gather as you start to prepare for retirement. Now, today's episode is titled Understanding Your Financial Paradigms in Retirement. And just for those of you that may not know this, the definition of paradigm is a typical pattern of something that is happening. And we have had many different types of paradigms when it comes to retirement distribution planning and retirement planning over the last several decades. But things have been changing drastically, so I'm going to be talking about those things today. The other thing that I want to get your assistance on is, for you to subscribe to our podcast. And if you can promote it and share as well, I would appreciate that very much. We happen to be one of the best podcasts right now going out there when it comes to retirement distribution planning, and I want to make sure that we keep it as such. Actually, we're going to be doing something a little bit different today than we have had in the past. I was having dinner with my wife and two couples that happen to be a really good friend of ours, and this is about maybe 7 or 8 days ago. And not only are they very good friends, but they have been clients of mine for almost 20 years. So obviously we do share a lot of good stuff between us, both business and personal, and some of us go on vacation together, and we do spend weekends, as much weekends as we possibly can together having, a good time. And obviously this weekend I spent 3 days in the Keys, and these two couples were there with us, and we really had a good time. But, today is raining, so, I'm in the office. So it's okay. I don't need to go anywhere. So life is good. So let's get going. In my discussion with my two clients, they were saying to me, Bert, in the last 20 years that we have known you, you have shared so much information, so much education, and so many different things that have made our lives a lot easier when it comes to retirement planning. That, I think what you ought to do is you got to start thinking about, writing a book and or selling a training course online, perhaps even for a small fee, in which you can compile a lot of the information that you share with us and you have shared with us for the past 20 years. And then turn that into an educational course that everyone can either listen to or watch at their convenience in order to assist them in maximizing their retirement planning at some point in time in the future. So I've been thinking about those things, not only when these clients mentioned it to me 7 or 8 days ago, but I've been thinking about that for quite some time. Now, as you very well know, I do podcasts on a weekly basis. I also do webinars every other week. We also do seminars and webcasts, and the seminars we do 2 Saturdays every single month or at a college or university, and these are educational workshops, and we don't charge any fees for attending any of these workshops in South Florida. So I am a true believer in providing education. In addition to that, I am a certified financial education instructor, and because of my relationship and the membership with SOFA, which is a Society for Financial Awareness, which is a 501c3 nonprofit organization, which ultimate goal is to eradicate financial illiteracy in the United States, then I am very proud of the fact that my number one goal with the vast majority of my clients is to provide education, because an educated client is going to have the ability to make educated decisions, and they're going to be making the right decisions not only for themselves but for their families along those lines. So I'm going to be putting together a webcast series. It's going to be a 7-part series, and this I'm going to do it as well on this podcast. So today is going to be the part 1 of understanding your financial paradigms in retirement. And today's is going to be a short one because it's going to deal with the challenges of retirement in the 21st century. Next week I'll do part 2, which will deal with tax rate risk and the impact of taxation in retirement. Week 3 I am going to do, or part 3 will be retirement distribution planning. Part 4 will be how to avoid the Social Security torpedo tax. Part 5 will be retirement distribution pitfalls. Part 6 will be mitigating stock market losses with a principal protection program. And then part 7, last but not least, will be long-term care planning. So I'm going to put all of these things together for all of you in a podcast over the next 7 weeks. So for the next 7 weeks, we're going to be doing part 1 through part 7. And then I am going to record do a video podcast, which I will sell for a nominal fee to make certain that I can recover my costs. But it's going to give you the ability to watch these podcasts at home, in your office, at your convenience on weekends, in order to enhance your retirement benefits from a business perspective, and also to have a positive impact for you and your family along those lines. All right, so today we're going to be talking about the challenges of retirement in the 21st century. And in this section, we're going to be discussing, how everyone envisions retirement, and the fact that everybody envisions retirement a little bit different. For some, it may be an extended vacation. For others, they may want to stay actively engaged with family, church, or community. Others want to continue to work on a part-time basis. Others may want to start a business of their own or do things that they've never done before. But at the end of the day, what's important to note is that without a clear vision for retirement, preparation can become quite difficult and many times almost impossible to attain. For obvious reasons, planning takes time. So you have to do your due diligence, and the fact that you're listening to this podcast on a weekly basis demonstrates that you care about your future, and you're willing to put the time and effort in order to maximize your retirement opportunities. Now, one of the things that we're going to be doing in this podcast and the next 7 podcasts, or the next 6 podcasts that we're going to be doing, in addition to the webcast that I have just talked to you about, is that we're going to be we're going to do comparisons between the old paradigm and the new paradigm. In other words, the old ways of doing things and the new ways of doing things. And obviously, when you look at the challenges of retirement in the 21st century, the old paradigm was a lot different than it is today. In the old days, most people worked for the same company their whole career. They would retire at age 65 and receive a pension from that company that they worked for. They would rely upon Social Security for supplemental income, not to be the core of the income, because the pension was going to take care of that. They placed less emphasis on their own investments, mutual funds, stocks, bonds, and so forth. I would argue that even prior to the 1980s, the vast majority of American families did not own a mutual fund. So they relied primarily on savings bonds, whole life insurance, pensions, and Social Security benefits, and that was about it. Investments, if you had any, paid for just supplemental retirement needs, or perhaps even play money from a business perspective. But obviously, things have changed quite rapidly over the last 40 years. The new paradigm, if you want to call it such, the average person now works for 7 different companies during their entire working career. The 401k, which came into being back in 1980, 1981, has actually replaced, the pension for many American employees. Most private companies have done away with their pension because of the fact that, when a company offers a pension, their liability on the books is enormous, and many companies have shifted away from that. So instead of, companies having the liability for providing a pension benefit to their employees, they shifted to a traditional 401k, in which not only did they shift the pension to the 401k, but they also shifted the liability and the responsibility to the employee as opposed to the company. Retirement for many is mostly self-funded, so you better have done a really good job in your 401k and your IRAs and your stocks and your bonds, and if you invested in real estate, because at the end of the day, the responsibility is totally yours. Social Security, sadly enough, may cover very little of lifestyle requirements because people are living above and beyond their means, even when it comes to retirement distribution planning. And some never fully retire but choose to stay engaged at some level. In the old days, when people retired under the old paradigm, people retired for good. But then again, they were not living as long as people are living today. So in today's environment, more and more people choose to stay engaged, depending on a certain level that they may need in order to maintain their standard of living. So, in summary, for this part 1 of the understanding your financial paradigms in retirement, I think it is important to know what you're retiring to as it is from what you're retiring from. So one of the things that I share, and I have shared in the past with many of you, is that, is more important to know what you're retiring to as opposed to where you're retiring from. If you're husband and wife, it's important that the two of you have a conversation with each other as to, what you want your retirement life to look like. You want to make certain that you can identify any discrepancies between the two of you, prior to pulling the trigger on retirement. Because if one of the spouses wants to travel and the other one wants to continue to work on a part-time basis, that's going to make it a lot more challenging. Sometimes one of the spouses wants to live abroad, and the other may want to stay in the United States. So again, that's going to bring issues and concerns that can create a challenge for the vast majority of Americans as they approach retirement. So it's not so much where you're retiring from, but what are you retiring to that is going to determine success or failure in your retirement life. The other part of this summary is that your retirement will likely look much different than your parents, and that's something to consider. Many of you may be the sandwich generation. You may still be taking care of some of your children, and also you may be taking care of your parents through long-term care issues or retirement issues, or running out of money before you run out of life, and it may prevent you from actually maximizing your go-go years, your slow-go years, and then the no-go years, which are the 3 decades that all of us need to plan for when it comes to retirement distribution planning. And we will be spending more time in discussing the qualities and the features and benefits of the go-go years, the slow-go years, and the no-go years. And then last but not least, you will have to adopt updated paradigms that reflect the new challenges that are facing today's pre-retirees as they get ready for retirement. So again, this is a very short podcast because this is the preamble to understanding your financial paradigms in retirement that we're going to do over a 7-part series. So again, this is part 1. And as I always say to all of you, my goal, and I am so happy that I had this dinner with my clients 7 or 8 days ago, is that my goal is to kind of help you and your families change the way that you see things, because when you change the way that you see things, the things that you see change. So again, if you want to discuss any financial items with me, please feel free to reach out. You can call me at area code 786-766-1042. You can also reach out to me at Bert, B-E-R-T, at Cambridge, F as in Frank, P as in Paul, LLC.com, or you can reach out to me as well at Bert, B-E-R-T, at GablesTaxGroup.com. So again, thanks very much for giving me a few minutes of your time again today, and I look forward to talking to you next week at the same time on Monday. So have a great week, stay safe, and we'll talk soon. Take care. Bye-bye.